Hello and welcome back. Hope you're having a nice weekend wherever you are. We're gonna talk a little bit about Alibaba today. It's a company that pretty much everybody is interested in. I'm still getting requests about making videos about it. And so here's a new one in which we're going to talk a bit about Alibaba and what's happening currently in the market in regards to Chinese stocks. Now, the first thing that you notice here, if we take a look at the stock news module, you will see that it discusses why Chinese companies have been slumping lately. They have had like 3 days of losses for the most part, although yesterday it was a small loss really. And that's going to happen. That's unavoidable. You will have days that stocks will be down, and especially whenever you have a downtrend. And how do you know you have a downtrend? Well, if you take a look at the stock analysis chart here, is a quick way to kind of realize that you're having a downtrend. If you go to for the 5 years chart, you will see, and that's the bigger picture pretty much, you will see that we are having lower highs. This is how you kind of discover downtrends. A lower high is basically a high that is lower than the previous one. So you had a high here, another high here, a high here, another high here, high, 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 high. So you see that they are getting lower. So these are lower highs. In comparison, this is a higher high, higher, 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 and higher here. So you can kind of picture a downtrend being this, what that makes it a downtrend really. And it can take a little while to adjust, at least technically. But in terms of what is happening in the markets, fundamentally, we're going to examine some of the news and see how we can actually play the current situation. As I've mentioned in the previous videos, Alibaba right now is an amazing company to hold. It's actually one of my largest holdings, the second largest holding that I have right now, behind Facebook, which is my largest one. And I really think that in the long run, the company will kind of flourish, and I wouldn't be surprised if it reaches maybe 250 or 300 pretty soon. So what we're going to do first is I wanted to take a little bit of a closer look at a very important chart that many of you may be aware of, but you may not have actually thought about it through a little bit. This is what happens with cycles. And I have made a video about cyclical stocks and have discussed cycles many times ago, many times in the past. But the thing is, cycles happen for every stock, and they can sometimes be happening regardless of market conditions. It could be just a trend, for example. And trends work the same way pretty much. There is always the stage where there is optimism, the stage where there is euphoria, and then the stock goes down. There is the panic selling, the fear, desperation, and thinking, how could I be so wrong? And then at some point it starts, people start accumulating again, and there is optimism going on. Now this happens again with everything, and you will see it a lot in cyclical stocks. Stocks like that are like commodity stocks, for instance, oil or gold, silver, things of that sort. This kind of stocks that are actually selling commodities and trading commodities can actually have this kind of cycles very frequently, and sometimes they have mini cycles within cycles. And this can help you actually trade companies. But the thing is, if you understand this, you can see that the best time to actually buy something is when there is capitulation, where people are actually selling and where there is panic. Of course, that's going to be the best time. The difficult thing to do is actually remain psychologically efficient. Not think about the times that the stock is going downwards. This is what makes a good investor really, and an investor that is going to be making money in the long run. Because somebody can actually see this right now and be like, okay, it has been going down a little bit. You see like the 1 month chart here. I mean, we had a day where it actually went up 25% or so, but then it has been going down again. And so somebody may be like, okay, let's pocket some gains, maybe sell it if I actually bought it low. They may be panicking. They may be like, okay, is it going back to 75? Well, anything could happen. I don't think it will, but anything could happen. The thing is, it doesn't affect me at all. Because again, this is about what the company is doing fundamentally in the long run. And at the end of the video, I'm gonna quickly discuss some of the things here about the company. But I have made quite a few videos about it. I just want to kind of reassure you in terms of the financials of the company and tell you why I am holding for the long run. And I'm not really paying attention at what is happening on the daily chart. It doesn't affect me at all. What does affect me is if there is something fundamentally changing with the company. Otherwise, I really don't care what the price is right now, because I'm very, very willing to wait a few years for Alibaba to actually be where it has to be and where it deserves to be in terms of its stock price. So the thing that I want to do next is kind of take a look at some of the news pieces here, and you will see it's the ones that are actually mentioned here in our stock news module. And let me go back. But I'm opening up a few of these, and for instance, you will see here that growth in Chinese tech firms comes to a halt as stock prices begin to fall. It kind of discusses here that the microenvironment, the crackdown on big tech, delisting risks, poor consumer sentiment in China is worse than the US right now, and so the Hong Kong's tech stock index is down almost 70% from its all-time high. And again, remember the cycles. Right now, unless we're entering an insane depression time, the tech stock in China will not remain down for that long. I mean, that's insane to happen, and it's not gonna be happening for a long time for sure. And you will see here that the article also discusses the big companies' performance, and you will see that most of these, or if not all of these, have been going down at about approximately the same rate, pretty much, which kind of makes sense when the whole index is crashing. But you can understand that it doesn't have a lot to do with the fundamentals for the most part. It's mainly a reaction to what the index is doing, and basically everybody is panic selling at the time, just because of these delisting threats and things of that sort. Now, you have seen, and I have made a video about it, that China and the US are actually working together to so that China can actually provide information and help the US actually, get the actual data for companies and actually be able to validate the data. And so they are kind of working on that, so that there are no more delisting fears, which I don't think there are fears that will actually hold ground for the most part, especially for the big companies like Alibaba. But it's good to have this, sorted out. And if that happens, I'm pretty sure we're gonna have a massive increase in a lot of Chinese stocks, because a lot of the risk will have dissipated. And this is actually perceived risk for the most part, because even if Alibaba somehow delists from the US, the company is still there. Nothing changes in terms of the financials of the company. The only thing that changes, you will be able to trade it in the US market. And yeah, there may be less capitals coming in, but again, the company will be the same. And so, if that is the case, in the long run, you are holding a company that is making these financials happen. And so, this is what you should be caring about, and not what is happening in the markets today or in the next week or in the next month. This is about the long time thing. And again, other articles discussing the same things here, and talking about the companies going down. You will see that there is a little bit of a negative sentiment right now. Although, if you take a look at Citigroup, they actually slashed the price target from 235 to 220, which is much, much higher than the current price. It's almost double. And so they do maintain a buy rating, as you can understand, and it makes a lot of sense. And other things here, another article that also discusses why some of these companies are down. And you will see that there is a lot of negative sentiment because they are talking about shutting down streaming services. Then some articles pretty much talking about shutting down the esports, the Penguin esports streaming service. So these kind of small news pieces tend to catch a fire really among investors. And when this happens, you know that you have a negative sentiment going on. And there is also the same thing, the whole deal, the regulatory concerns. There is also the virus, that is also a thing with some potential lockdowns right now. And, the fear keeps going for a little while, and that will be the case, I'm pretty sure, for the upcoming months. I wouldn't be surprised. And you have to, to bear in mind that you have to fasten your seatbelts here, because you're going to be seeing some days where the stock price is going to be going down, maybe even heavily for some days consecutively. But again, in the long run, I do fully expect this one to recover and do even much better. Why? Because of the financials. We have talked about them in the past, with a price to free cash flow ratio of 14%, and the outstanding shares is basically my only concern. But I do know that, and they have announced really, that they are buying back shares in bulk. So they're going to be buying back a lot of shares, and this outstanding shares count is going to get decreased massively. And so that's going to be awesome for investors here. And if we take a quick look at the stock evaluation tool, again, we have done this in the past. Even if we go with relatively conservative projections, you'll see what the average revenue growth is here. So we're going to go much conservative here, 15, 17, and let's go 20. Net income margin of, you'll see here it's about 20 to 25%, the net income margins for the most part. So we're going to go 20, 22, and 26. The free cash flow margin, pretty elevated here. We do have a 90, so let's go 90, 100, and 110. And the annual return of 13 is what we want to be making. And if I hit calculate, again, you will see that with Alibaba, we are far below even the lowest estimates here. And this is why I love this company, and it's one of my favorite targets right now. And this is why I kept on buying and even bought when it was far below 100, really. And yeah, I have a pretty large stake on this one, and I'm sure some of you will have even larger stake on this one, as I do know you are telling me about it. And I love hearing about what you are doing with Alibaba. So leave a comment below. Let me know what you think about it. How do you read these current concerns? What are you doing with it? Are you buying more? Are you thinking of selling a little bit? I wouldn't, but I'd love to hear what you do. And I hope you enjoyed the video. If you did, please leave a like and subscribe. I'm actually right now uploading this tool on a server, on a public server, and it's going to be available to you in a month or so. It's actually almost ready. I'm just doing some final testing, and in the next videos I will let you know how to access it. So you may want to stay around, because this is a very powerful tool, and I think you can actually use it to make a lot of money in the long run. So I'm using it daily. I love it. And still keep adding things to it, and I will be adding more as new members come in and ask for new modules here. I will be working on this, and I'm still working on this daily. So I'd love to see you around. Thank you for watching the video, and I'll see you in the next one. Bye bye.